this news piece. Dipan Mehta is still with us. Dipan, you tracked some of these names. Now, how do you approach these stocks? Yesterday there was Bharti, which was down quite a bit. Idea, of course, people just keep speculating. So that was still doing, was still showing some traction. And of course, Indus Tower, which looked really strong. Your thoughts?
Well, I think that's the exciting space because while there will be competition, there is a great deal of consolidation on the tower company side. And maybe a new opportunity can open up for Indus Towers. The biggest problem was that they were not getting enough tenants on their existing infrastructure. And if you get external players to come on their existing towers, then that can instantly improve the yield for Indus Towers. And valuation-wise, it is extremely attractive, 5% type of a dividend yield, 9 times earnings. I think in a way, it's a bit of a no-brainer. And if you have a 3-year type of a view, then the stock can certainly, maybe double from these levels as well. So positive on that company. Another company which comes to mind is Tejas Networks also, although not as cheap as Bharti, but I think under the new management, a lot of new opportunities open up for Tejas Networks as well. So one could look at, slight amount of reshuffling within the telecom weightages or the stocks you have in your portfolio, go slightly underweight on maybe Bharti Airtel, look at Indus Towers, Tejas Networks. I think on a medium to longer term basis, that may outperform even Bharti Airtel. But even Bharti Airtel on a standalone basis, I think looks pretty solid. And I'm not too perturbed about any emerging competition. They have withstood a lot of challenges within the industry. Players have come and gone, but they have gone from strength to strength, and we must keep that in mind.
All right, Dipan, we had a couple of these financial names that came out with an update, whether it's Spandana, Suryodaya, or even 5paisa. Out of that, I think Suryodaya SFB looked pretty good. Any view on any of these 3 stocks that you're tracking?
No, Nigel, when you have Bajaj Finance coming with such spectacular kind of an update, why look here and there or so? The only thing with Bajaj Finance is it is expensive. But then, it has stood the test of time. It has handled many crises, be it from ILFS to the pandemic, and the likes of Suryodaya and some of the other small NBFCs have only caused a lot of shareholder value loss whenever there is a crisis in the NBFC or the banking industry. So I have learned the hard way that within the lending space, you got to be with the quality. And if you're long enough on a 2, 3, 5, 10-year basis, these companies will always outperform the smaller and weaker players. There may be phases where the small mid-cap, the not so strong NBFCs banks may outperform. But when the crisis hits, when the problems start, when the NPAs start to shoot up, there's no exit opportunity in these companies. So I would say that stick to the best in class over there. And I think that these corrections of all the large cap private sector banks, the NBFCs like Bajaj Finance, you could add Chola also to that name, are at attractive valuations. And over a medium to long term basis, I think they will outperform even the small mid cap NBFCs and banks.
Okay, Dipan, stay on. We have more questions for you. We'll need to take a break now. Up next, we'll talk about the market technicals. Mitesh Thakkar and Sudarshan Sukhani will be joining us. Welcome back. We have 132-point downtake on the SGX Nifty. Sudarshan Sukhani and Mitesh Thakkar now joining us. Good morning, Sudarshan. The buy on dip worked out yesterday, but does it look like today could be a bit different?
Good morning, Anuj. You're right. It could be different, but the trend has not changed. See, what happened was yesterday the market eventually rallied to close at its highs, almost at the high of this up move. So today, despite the decline or the gap down, the market trend remains intact. We are still in a short-term uptrend. So we'll still have to wait and do that buy on dip strategy today. Maybe that 140-point decline, something more in the morning, could lead to a rally later on. So the trade is still the same. Let the texture of the market, I think this is the word you use often, let it change. And then we'll say, okay, the buy on dip strategy is no longer valid. But for today, the Nifty and the Bank Nifty are both buying on dips. The stops are much tighter. For Nifty, the stop is 16,000. So wait patiently for the market to settle down and then look for a buying opportunity. And for the Bank Nifty, the stop is 34,800. So with these stops, wait for an opportunity to go long.
16,000. I mean, if we open somewhere around 16,100 or so, That's a decent enough stop loss. And 34,800 on the Bank Nifty. We closed at 35,470. And let's see after the gap down, where do we open? Mitesh, good morning. How are you approaching the Nifty and the Bank Nifty today?
Good morning, Anuj. Yesterday, I was positive we wanted to buy the dip, but yesterday also what happened was that we kind of retested the highs which were made day before around 16,250 and failed to get past that. And the IT sector has had some kind of a breakdown. So today I'm slightly, not very optimistic to buy immediately. My sense is that 2 or 3 attempts on the hourly charts failing at same level of 16,250 could call for some consolidation. So therefore, the buying should be slightly at deeper levels. So around 16,000, 16,050 becomes the buying zone with a stop below 15,970. Idea is that we might do a range between 16,000 to about 16,250 for 2-3 days. That consolidation might provide base for the next leg of up move. But till then, I think I'm not in a hurry to buy.
Okay, but what about individual stocks, Mitesh? What are you looking at?
So good morning, Nigel. Yesterday we had all buy calls. Today it's a mix of buy and sell calls. I have 2 buys and 2 sell calls. On the buying side is Deepak Nitrate, buy around 1815 for targets of 1780 for stop with a stop at 1785 for targets of 1890. And a couple of IT names on the sell side. HCL Tech is a sell with a stop at 960 for targets of 910. Infi is a sell with a stop at 1490 for targets of 1440, and Bata is a buy. Again, on mild declines around 1820, buy with a stop at 1795 for targets of 1875.
Okay, increase the sell, Bata as a buy. Sudarshan, let's wrap up with your picks. What are you buying and selling?
Well, the trade is still to buy on dips. And then, of course, Anuj, there will be one day when the buy on dips will not work. That will be the first sign that the trend is changing. Biocon is a buying opportunity. Sometimes pharma and related sectors do very differently from the Nifty. That's a buy with a stop under 315. Some base building is going on. Cummins is an intraday short. The stock had a very handsome rally. Now that rally seems to be encountering resistance. Sell with a stop above 1133. HAL, one of my favorites, continues to be a buy. The stop is tight, 1700. See if this is base, if support holds. And finally, L&T Finance, which has just broken out of a nice, attractive base, is a buying opportunity with a stop under 66.
Okay. All right. Thanks, gentlemen. We'll keep coming back to you all. Well, for the time being, let's turn our attention from the equity markets to the currency space. And the Reserve Bank has recently announced a bunch of steps to liberalize foreign flows. It has announced arrangements for use of the rupee for international trade payments. Now, CNBC TV18 learns that large banks are now aggressively seeking foreign deposits by offering higher rates. Lata's with us to break that down for us. Morning, Lata.
Yes, the Reserve Bank did announce liberalizing of FCNRB deposits last week, and now looks like it has started yielding results. We learned yesterday night that SBI has upped interest rates by 85 basis points on dollar-denominated FCNRB deposits up to 3 years. For deposits over 3 years, it's 80 basis points increase over the previous rates. Likewise, on pound deposits, a 25 basis hike. On Canadian dollar and Australian dollar deposits, also they've increased rates by about half a percentage point. HDFC Bank's website also shows updated rates as of July 9th. And the updated rates show that for 1 to 2 year dollar deposits, they are now paying 3.35%. I do not know the older rates, but banking sources say that the increase is about 100 basis points. ICICI is offering a similar rate of 3.35 on dollar deposits. Again, I do not know the increase because the banks have not gotten back with the exact increase, but clearly it looks like at least 100 basis point increase. Short point, the Reserve Bank steps seem to be working because it is, the rates are only now on offer, and chances are the dollars will start flowing since they are attractive by global standards. Likewise, or rather separately, not likewise, the Reserve Bank announced yesterday a set of arrangements that enables importers and exporters to use rupee to make payments, both sides. The currency's exchange rate will have to be dollar, market determined. I mean, if you're exchanging for Sri Lankan rupees or for Russian ruble, it is to be market determined. Now, how this works is the Indian foreign branches of Indian banks, like say SBI's foreign branch, will allow a correspondent bank, say a Russian bank, a Sri Lankan bank, a Nepalese bank, to open a Vostro account. That's what it's called, a Vostro account into which rupee payments can be made. So if BPCL is buying crude, it pays rupees into that, say, VTB bank's account, in SBI, in Soviet Union, and thus pays in rupees. The Russians can use that to either purchase exports from India, or if they have surplus, they can invest it in Government of India securities. Now, I want to make it very clear that the press release does not say Russia, does not say rupee-ruble trade, does not say Sri Lanka. But who would want to hold Indian rupees? It's not internationally accepted. So chances are that countries like Russia and Sri Lanka may use it. This again would be good, because that will mean Indian refiners can buy some part of their crude cheaper, and that also will be a means to bridge the current account deficit. My sense is all these steps are rupee positive, and incrementally, even if the rupee falls, it will fall much less than other currencies. That was evidence yesterday. Yesterday, most currencies, Korean won, South African rand, even the yen, all of them fell by nearly 1%, 0.8. Rupee fell by 0.25%.
But this is not a sort of broad internationalizing the rupee kind of move. This is very specific.
Yeah,
right?
I mean, it's a little ambitious.
Exactly.
It's a little ambitious to say that, rupee will be used internationally. At some point in time, it may become like the Chinese have, renminbi denominated trades with their trading partners. Maybe if we become as big as that, it might be. But at the moment, it looks like it will be Russia and China.
Okay, Lata, thanks a lot for that. And yes, actually the rupee has fallen, but it's been quite resilient if you compare it to a lot of its peers. We'll take a break. Once we come back, we'll have the pre-open rates, and also, of course, we'll connect with Amit Murarka of Access Capital to discuss the potential export duty relief to steel sector. Stay tuned. Welcome back. Well, it's 9 a.m. So, first thing that we want to say is if there's been any impact on the currency because of the move, and at lo and behold, the rupee is actually opening a bit weak. I mean, at least in the futures market, there's absolutely no strength. 79, 57, 75 is sort of where it's opening. The 15th July future on the NSE, and I think the spot rate, normally there's a bit of a delay of about a minute or so, but we'll find out. And the pre-opening rates are also in. Okay, 79.51 is what you have on the rupee, 7 paisa a week for starters, the first tick in the spot market as well. Shubham Agarwal is joining us. He's Chief Executive Officer and Head of Research at Quantsap Advisory. Does a lot of work in the futures and options segment. Shubham, good morning. So, what are your top trades?
Hi, good morning, Anuj. So, looking at the overall placement of the indices, looks like that a lot of ATM straddles are sold, which is suggesting that the market might just be sideways in a narrow band of about 200 to 300 points. So after today's decline, I think we should kind of form a mixed trade. So I have two buys and one sell today. The first one being a buy on ITC. And if you look at the consumption space, that has been relatively outperforming, and ITC is consistently making new highs. So a 300 strike call option on ITC can be bought for a target of 5 with a stop loss at 2. The second buy call is also from the similar space, and it is Indian Hotel, which has been forming positive derivative data. And yesterday also we saw a breakout happening. So looks like that there could be some more follow-up buying to this. So Indian Hotel is a buy for a target of 260 with a stop loss at 238. And lastly, one sell call on Wipro. And if you look at the IT space, yesterday there were some major breakdowns in most of the IT. And the derivative data is also suggesting that most of the IT stocks are in a short covering cycle. So 410 strike put option on Wipro can be bought for a target of 20 with a stop loss at 9.
Okay, thanks very much for that. So that's basically what we have as far as the F&O side of things is concerned. The market, the pre-open is starting with about an 80-odd point cut on the Nifty. So we'll see 16,133. But it's just the beginning, and 6 or 7 minutes in, things will settle down. The dollar rupee, no real respite. It's a new record. It's 79.55. As Lata earlier explained, I mean, this seems very targeted measures. We may actually see some inflow, dollars coming home. But, I mean, the broader tide is of the dollar rising. I mean, as we highlighted right on top, it's been extremely strong. And overnight, the DXY, the dollar index, went up another 1%. It's up, I think, 13% or so from the beginning of the year. So it's a dollar strength story, and little to do, at least at the margin, not very much to do with specific currencies. Of course, I mean, weaker currencies depreciate more, as we've seen around the world. But with the rupee, I don't think that really is the case at this point. This is a dollar strength playing out. 0.15%, dollar rupee, that's a change which is coming through. The Nifty is settling down. We've got about, 46 odd points in terms of a loss. Dipan Mehta, of course, is still with us. Dipan, any thoughts on the rupee move that we are seeing? Any implications in the equity world as you see it?
Well, of course, exporters like IT services company do benefit, but then I think it only leads to more FII outflows. And rupee depreciating generally is not very, if you see past history, is not that great for equity markets as well. So let's just keep our fingers crossed that things stabilize around these levels or so. It's very difficult to call the currency markets, even more difficult than equity, I think, because there are too many factors at play over there. But generally, I think a rupee depreciating rupee is not very positive for equities, and investors should keep that in mind.
Okay, good speaking to you, Dipan. Thanks so much for stopping by and filling us in with your take on a whole host of stocks. But let's focus on the steel sector. Sources say that the government is considering a relook at the export duty on steel products on request by the sector on the whole. We learned that the government is considering a proposal to discontinue the 15% export duty on certain steel products. Well, to understand about the potential impact on this, we're joined by Amit Murarka.